Property, plant and equipment. Depending on the type of company you may be looking at, property plant equipment can make a portion of a company's assets. Property, plant and equipment, also known as PPE, are tangible assets that are held by an entity for the use in production of supply and services, for rental or others, or for administrative purposes, and are expected to be used during more than one period. Thus, it is classified as a non-current asset which has a life of more than 12 months. Property, plant and equipment is a term used for an asset account on a company's balance sheet. As the name suggests, the account includes a company's land, buildings, machinery, office equipment, vehicles, furniture and fixtures involved in actual operations. Examples of assets that are not PPE include inventory, cash and cash equivalents, investment property and non-current assets held for sale. Now, let's take a look at the stages of life of property, plant and equipment: acquisition, utilization and disposal. Acquisition. As an asset is acquired, such as machinery, it can only be brought onto the books of the company if it meets the asset definition and recognition criteria. The recognition criteria includes: 1. It must be probable that future economic benefits associated with the asset will flow to the entity, and 2. The cost of the asset can be measured reliably. Assuming it meets both criteria, we then need to ensure that it is classified as PPE and not as other assets such as investment property or inventory. For example, building held to earn rent as an investment property and not a PPE. Furthermore, we need to calculate the initial value of this asset that will appear on the company's financial statement. This is called the initial measurement. The cost to the company of this item of PPE included in an asset's initial measurement are all costs to get the asset into its place and condition for use as management intended. The cost comprises purchase price, which includes import duties and non-refundable taxes after deducting trade discounts and rebates. It also includes the cost directly attributable in bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by management. For example, site preparation cost and initial delivery and handling professional fees. And finally, the initial estimate of the cost of dismantling and restoring the site on which it is located, the obligation for which an entity occurs. The cost of an item of property, plant and equipment is the cash price equivalent at the recognition date. If the payment for the asset is postponed for a later date, this amount shall be discounted in the difference between the future payment and cash price equivalent as the interest. If an item is acquired in exchange for other non-monetary assets, then it shall be initially measured at the order of priority. Fair value of asset given up. Fair value of asset received. Carrying amount of the asset given up. If the exchange lacks commercial substance, the PPE acquired is measured at the carrying amount of the asset given up. Utilization. Capitalization of cost ceases when the PPE is in the location and condition necessary for it to be capable of operating in a manner intended by management. Therefore, costs incurred in using or redeploying a PPE are not capitalized. PA 16 specifically addresses the capitalization of the following expenditures: replacement cost and major inspections. Replacement cost. Some PPE have parts that need to be replaced, e.g. the seats in an aircraft. The cost of replacing a part of an item of PPE is capitalized if the recognition criteria are met. The carrying amount of the replaced part, old part, is derecognized and charged as loss, regardless of whether it had been depreciated separately or not. If the carrying amount of the replaced part cannot be determined, the cost of the replacement part, new part, is used as an indication of what the cost of the replaced part was at the time it was acquired or constructed. Major inspections. Some PPE require regular major inspections as a condition for their continued operation. For example, a cruise ship may not be permitted to continue sailing without the inspection. Major inspections are accounted for similar to replacement costs, i.e., the cost of a major inspection is capitalized while the carrying amount of the previous inspection is derecognized. Moreover, as the asset ages and is used, they lose its values. We need to depreciate and impair the asset. This process is known as subsequent measurement. Subsequent measurement for PPE can either be measured as cost model or the revaluation model. Under the cost model, the property, plant and equipment shall be carried at cost less any accumulated depreciation and any accumulated impairment loss. On the other hand, in the revaluation model, the property, plant and equipment is carried at its revalued carrying amount, which is the fair value at the date of revaluation less any subsequent accumulated depreciation and any subsequent accumulated impairment loss. Accounting for revaluations. An increase or decrease in the carrying amount of a PPE resulting from revaluation is recognized in other comprehensive income and accumulated in equity under the revaluation surplus account, except for the following. A. An increase that represents a reversal of a previous impairment loss is recognized in profit or loss as impairment gain. B. A decrease in excess of the credit balance in the revaluation surplus of the asset is recognized in profit or loss as impairment loss. Note that after revaluation, the revalued asset is depreciated based on its fair value. Of course, as each asset loses its economic benefit, it causes the business to lose money. This would mean that depreciation is an expense. Depreciation is the systematic allocation of the depreciable amount of an asset over its useful life. This definition contains three main parameters: depreciable amount, useful life, and systematic basis. Under the cost model, a depreciable amount is simply items cost less residual value. Residual value is any amount that you can obtain from the asset at the end of its useful life less estimated cost of disposal. In short, the selling price that you assume to receive. Useful life is the period over which an asset is expected to be available for use by an entity, or alternatively, it is also the number of production units expected to be obtained from the asset by the entity. So, property, plant and equipment may be depreciated based on time or based on the number of units produced. Useful life depends on many factors such as wear and tear, legal or technical limits, etc. The third element is systematic basis, meaning the selection of appropriate depreciation methods. So, what are the different depreciation methods? Depreciation methods for PPE include the straight-line method, diminishing balance method, and unit of production method. However, PA 16 does not prescribe any specific method. The choice of depreciation method depends on management judgment.
Among these methods, the common and simple method used is the straight-line method. An equal amount of depreciation is applied every year for the asset's useful life. The formula is cost less salvage value divided by useful life in the number of years. Note that even though land is considered as property, plant and equipment, it can never be depreciated. In fact, sometimes it actually increases in value over time. Note further that regarding impairment, we check annually for any indications of impairment, and if an indication exists, we then test for impairment. An impairment expense is recognized when the recoverable amount of PPE is lower than the carrying amount. Disposal. An asset of PPE shall be derecognized on disposal or when no future economic benefits are expected from the use or disposal. Derecognition means that the cost of PPE together with the related accumulated depreciation shall be removed from the accounts in the company's financial statement. When the item of property, plant and equipment is disposed of, gain or loss may arise, which is calculated as net disposal proceeds less any carrying amount of property, plant and equipment. Gain or loss on disposal of property, plant and equipment is included in profit or loss but not as revenue. Rather, it is shown as gain from sale of PPE.
Now, let's look at an example to bring this all together. Intelligente Company purchased a building for $200,000 on January 1, 2022. The estimated useful life is 5 years with no residual value. The straight-line method of depreciation model is used to depreciate the building, and it is accounted for on a cost model. The recoverable amount is as follows: 2022 to $160,000, 2023 to $192,000, 2024 to $72,000, and 2025 to $48,000. To get the depreciation, it is calculated as $200,000, which is the acquisition cost less zero residual value divided by 5 years useful life. The depreciation each year will be $40,000. Now, let's prepare the journal entries for each year. For the 2022 financial year, we debit building for $200,000 and credit cash for $200,000. At the end of the year, we recognized depreciation expense of $40,000 as computed. The entries would be debit depreciation expense 40,000 and credit accumulated depreciation 40,000. In this year, there is no impairment as the recoverable amount equals the carrying amount. In 2023, we only recognized depreciation of 40,000. Again, no impairment as the recoverable amount is higher than the carrying amount. Recoverable amount of 192,000 is greater than the carrying amount of 120,000. Carrying amount for this year is 120,000 computed as 200,000 less 40,000 depreciation for 2022 and another 40,000 deduction for 2023. In 2024, we will again depreciate the building for 40,000, which gives us a carrying amount of 80,000. However, since the recoverable amount is only 72,000, which is lower than the carrying amount for 8,000, we need to impair the building by 8,000. Entry will be debit impairment loss 8,000 and credit accumulated impairment loss 8,000. In 2025, the carrying amount is 72,000 computed as 80,000 less the impairment loss of 8,000. We depreciate the building by its remaining useful life, which is 2 years. And therefore recognize depreciation of 36,000. But now the recoverable amount is 48,000, which is greater than the carrying amount of 36,000. This time, because we have previously impaired the building, we can reverse the impairment. The reversal of impairment would be as follows. We take the original cost of the building of 200,000 less 4 years of depreciation, which is 160,000 equals 40,000, which is the carrying amount of the building as if it has never been impaired. We then minus the current carrying amount, which is 36,000, the balance of 4,000 is the limit of the impairment reversal. Therefore, the final journal entry for 2025 would be debit accumulated impairment and impairment reversal of 4,000.